Good morning.
Morning.
Yes. Is money market investing still attractive? And I remember in the days of 125 banks, we had a whole basket of money market instruments. Suddenly they seem to have faded away.
Okay. Well, basically, money markets are still very attractive. And what you have now is the Securities and Exchange Commission authorizing and also managing or regulating that sector. So we're different from the banks. So
for those of you who are investments and securities,
the asset managers manage mutual funds, which is what is agreed by the Securities and Exchange Commission, by regulations. However, maybe what you're trying to say is that there's still instruments that you can invest in from money market. From the banks? Oh, certainly, yes.
But the way things are, there's so much with the Naira effect situation.
Yeah, because...
Do you think it's a good time to roll out a public offer as far as this goes?
Fantastic time, beautiful time.
You see what I'm not seeing?
Oh, yes, because the whole story looks like it's gloom and doom from all the other participants. But for local investors, I think this is the best time. You can invest in the money market funds because if your liquidity is just in the bank or somewhere else, your assets, for example, are not yielding anything, the best time is to pull money together and have better purchasing power. So if you put money in the mutual fund, for example, mutual funds are like a vehicle where different investors, young investors, collective investment, pull money in a scheme together and you invest in underlying instruments. And if you talk about interest rates, the interest rates are very, very attractive now. Government borrowing at rates higher than you can imagine.
Bills and bonds.
Yes.
Yes.
But because it's a money market fund, you can only invest in instruments that are less than 1 year or equal to 1 year. And if you look at the
CPs fall into that?
Yes.
BA.
Yes, you have commercial papers, you have the Nigerian treasury bills, you have the OMOs, and then you have the bank deposits, and any other type of bankers acceptance. So because of the interest rate right now, inflation also being very high, interest rate is high. From the last MPC meeting, that CBN had to jack up the interest rate higher. And so for any type of investor, from individuals, from retail clients, from HNIs, from corporates, from even institutional clients, everybody can pull money together and have a better bargaining power through a mutual fund investment.
Do you think mutual funds actually can grow the market? Do you think it can help deepen markets? Do you think it can help the value of the currencies or other assets we have at the marketplace?
Well, when you talk about currency, really, rather than you have this so-called trying to attract offshore investors to come in to buy your debts, you can sell it to local investors.
And the money stays at home.
And the money stays at home.
The yield stays at home.
The yield stays at home. And people earn above, they get good returns.
So looking at the stock market now, a little bit, treading water, you think it's a good time to sneak in a money market instrument and say, hey, I think we should take advantage of this?
Yes, because it's liquid. You can take your money anytime.
Really?
It's liquid, yes.
More liquid than equities?
Yes, much more liquid than equities.
Yeah, because you're dealing with basically the money in the vault.
Yes, and who needs money right now? Don't tell me that. I didn't say that. Federal government needs money. So you keep borrowing to them at a risk-free interest rate.
So talk about the risk and return. That's what you're talking about. My risk-return ratio.
It's absolutely very, very low.
How low is it? I got a skin cut yesterday. As low as this?
Lower than that.
Maybe lower. Well, not than this. That's going to the scalp.
Yes,
as low as
yes, because you're borrowing to government. You're lending to government, rather.
And I'm looking at something around 16, 18%. That's good business.
It is. You probably won't see this kind of yields sometimes to come.
What yields are you offering?
Basically because we're
on the instrument, for example. What yields are you offering? Okay,
because we're benchmarking against the 90-day treasury bills. That's what our target return is.
And what's the figure?
14 to 16.
14 to 16.
Yes.
You think that's good enough?
It is.
It is.
It is, because if you go to the market yourself, you won't have that much bargaining power.
Really?
Yes.
If I pick up the treasury bills myself and order.
You wouldn't have opportunity to some larger tickets that gives you a higher yield. That's why it's good to pull funds together with other people.
Okay. Okay. Thank you very much. Olufisayo, Ogunbiyi, Badaru. Thank you very much for coming through and talking about the haircuts and how lower this will go. I ain't going to let this go any lower than this. I hope to see you some other time. That's about a wrap on today's program, Business Morning, live here on Channels Television. Well, thank you for watching, everyone, wherever you are on planet Earth. I'll see you again. Bye for now.